So we saw that sell-off last week that was a lot bigger than we have seen recently, and as we tend to see, there's a spike in volatility at the same time. So what sort of made it different from the other sell-offs we have seen this year?
Yeah, for sure. I mean, just speaking in terms of the size of the S&P swings, we had moves of 1.5 or larger percentage points. Back to back, we had big gains in the middle of the week that were quickly erased. So, I mean, that volatility is absolutely back in the market. Things have been very complacent over the course of this bull run, and so having those big swings come back into play is certainly jostling investors a little bit. In fact, today came in and was looking at some strategist reports, and even though nobody's really changing in price targets or anything at this point, you do see some of those traders saying, okay, I'm a little bit hesitant to kind of go with that buy the dip mentality that has kind of, been the play throughout all of these previous 3 to 4% dips. So it's definitely interesting to see sort of how those traders are adjusting their strategies a little bit and kind of a little bit hesitant to say, okay, we're obviously going to go back up. It's sort of a wait and see. And I mean, obviously the big thing here is we're sort of approaching the sunset of QE. So
right.
that wasn't the case in the last few dips.
And just to note also, when you look at today's trading and any swings we might see, it is a holiday in much of the country.
Right.
And so some of the strategist notes I've seen have said we could see some volatility even within the session today because it's relatively thinly traded. There are some people who did not come to work today. The bond market is closed as well, which tends to cause that. So when you look at the role, to take a step back, the volatility is playing right now, as you say, it's not just about sort of whether you're fundamentally positive or negative. I suppose you have to take that volatility into account.
Yeah, absolutely. I mean, you definitely are seeing some, kind of trying to assess what your play is here. And you do hear some folks saying, okay, now, previously when we had a dip, it's okay, buy the sector that got beat up. But nobody really wants to buy energy right now. You're not really hearing, there are still some folks say, okay, I do have confidence in the market. I'm going to buy the sectors that are getting hit the worst on these dips. But for a large part, what folks have been saying to me, the past 48 hours, okay, now we're going to be looking at those stocks that, and going forward, aren't very dependent on the growth strategy, aren't really dependent on growth. We're going to look at financials, stuff like that, and that's kind of where you've heard the talk being. And of course, that's going to be even more relevant this week with earnings coming out. And
right, I was going to say, what are you hearing from folks in terms of what they're watching this week once we get beyond the Columbus Day? Yeah,
obviously. Well, today, I mean, and going forward, we're kind of straddling along that 200 daily moving average. And when I left my desk, we were above it. But that's definitely something that traders are going to be paying close attention to. The last time we dipped below that was November, and so moving below that is definitely going to be a technical heads up.
Okay, thanks, Oliver. Appreciate it. Thank you so
Absolutely.
much.